It might be intellectual property rights or, or some other random thing, a natural gas pipeline. Well, in this case, it turns out that Bitcoin is the uncorrelated asset, the greatest uncorrelated asset in the world, but you don't have to take my word for it. These are Fidelity's numbers. It's, you know, if you check it, it just has the weakest correlation, you know, very low correlation to the S&P, but also it's got the highest Sharpe ratio. So for the volatility you're taking, you're getting outsized performance.
Hey guys, welcome to Everyday Finance. The recent surge in Bitcoin has taken a sharp turn, increasing by almost 50% since April, but now entering volatile territory as traders lock in an incredible $11.6 billion in profits over the past month, up from just $1.2 billion earlier. If new capital doesn't intervene to counteract the increased selling pressure, this spike in profit-taking might limit future gains. Analysts are wondering if Bitcoin can maintain its position at important support levels, or if a more significant correction is imminent as the market currently hovers in a precarious equilibrium. Michael Saylor, chairman of MicroStrategy, sees the current volatility as a part of a larger trend in which long-term investors are switching from traditional assets to Bitcoin due to its decentralized nature and digital efficiency. He likens trust in Bitcoin to the indisputable, mathematically and logically grounded certainty of gravity. Saylor contends that even small portfolio allocations to Bitcoin could spark enormous demand as institutional acceptance increases. A 3% allocation could grow to 10%, radically altering capital flows and bringing about a shift in the financial system. The next few days may see whether Bitcoin stabilizes or experiences a more severe decline as the market processes these developments. The structural transformation of global finance seems to be well underway, regardless of the short-term actions taken.
Now I've laid out the problem. Let's talk about the Bitcoin solution. What is Bitcoin? Bitcoin's the next wave. Today, it is the 7th largest asset in the world. And you can count them, right? Number 1 asset in the world, gold. 5,000-year head start. If you're not 5,000 years old, if you don't want to wait 5,000 years, you're in the right place, because I'm going to give you a fast track. After that, you got the Magnificent Seven. You got NVIDIA, you got Apple, you got Microsoft, you got Amazon, you got Alphabet, you got Meta. And then just creeping in there, you've got some silver, and then you've got Saudi Aramco. But if you look at this, what you'll see is that the fastest horse in the race, the one that's actually moving up the leaderboard the fastest, is Bitcoin. 62% a year, ARR. Not for the past year, not for the past 4 years, not for the past 6 years, for the past 10, ever since it started, more than 62% a year. That's just the past 4 years, though. And it is running to the top, and it will run past all the Magnificent Seven, and it will run past gold, and I'm going to show you why in the rest of my presentation. Now, it's not just the 7th largest, right? It's the fastest growing. It is the most popular in the world, most popular asset. I walk to the beach in southern Italy, people recognize me. I'm walking down into a hamburger shack in Uruguay, people recognize me. I'm on the tarmac and the runway in Switzerland. The guy that's servicing the engines and he's guiding the airplanes on the flight line. They recognize me, right? Bitcoin is spread across hundreds of millions of people. Probably 500 million people know what this is, and they're all very passionate about it in a way that they're not passionate about maybe Saudi Aramco or Meta stock. It's the most interesting because something is happening every minute of the day. You know, it crashed at 90,000 2 days ago. People are losing their minds. Smashed through 100,000. My phone's ringing off the hook. It's always moving. much more interesting than these other things. It's pure digital. Something that, if you can wire $1 billion from one iPhone to another Android phone between 6 billion people in a split second, that becomes very interesting and very digital, right? You can't digitize silver, you can't digitize gold. Most of these other things are just securities. You can't even take custody of your own security. You can't trade those securities on Saturday afternoon. So Bitcoin is pure digital asset. It's useful. How useful? If you need $1 billion in 5 minutes on Saturday afternoon and your life depended upon it, there's only one thing up there that will actually give it to you. Only one thing. People, what's the consequence of that? Well, it's volatile, it's interesting. And lastly, it's global. The Magnificent Seven stocks are really just Western. They're United States, a little bit of Western Europe. Saudi Aramco is Middle East. You don't see any Chinese companies up there, right? And so Bitcoin is very, very rare combination of things that make it interesting to billions of people around the planet. Now, what happens when I put Bitcoin on my asset allocation chart here? Well, it just punches a hole in it, right? Like when I didn't put Bitcoin up there first because you wouldn't see anything else. Everything else is relatively uninteresting against 60%. What you see up there is there's an answer, and then there's a bunch of noise. There's a signal, and there's a bunch of noise. And if we look at it, that's 60% for 4 years. And when you look at it against this chart, this makes it much simpler. You have a bunch of money, lockdowns come along. In August of 2020, you can buy bonds, you can buy gold, you can buy real estate. All three of those don't beat the S&P index. They don't beat the hurdle rate. The conventional cost of capital is the S&P index. It's 13% every year for 4 years. It's not a surprise. And then Bitcoin. Bitcoin is, if you can't be Bezos, Musk, and Zuckerberg, and if you're not going to actually buy those stocks, how do you outperform them? Well, Bitcoin is double. Bitcoin is 4 to 5 times better than the S&P index, right? It's a pretty compelling chart. You might say, well, it's just the last 4 years. But the truth is, Bitcoin's the best asset in 11 of the past 14 years. This has been the story for 15 years now. If you look at every other asset class, well, you've got one that's up 147% a year on average since 2011. The next best is 16. And everything else is just languishing, right? There's a signal there. It's screaming at you. It's not just the best performing asset, it's the best performing uncorrelated asset. If you go to conferences of high net worth individuals, the affluent, JP Morgan puts on one. It's called the Alternative Investments Conference. The idea is you're supposed to find an alternative thing to invest in which isn't risk assets. You're not supposed to just buy a portfolio of equities. So find me something that will go up in value that isn't correlated to equities. This is what every endowment manager at Yale or Harvard is looking for. They're looking for assets they can buy that aren't correlated to the stock market. It might be timber rights, or it might be real estate. Real estate's the most common. It might be intellectual property rights or some other random thing, a natural gas pipeline. Well, in this case, it turns out that Bitcoin is the uncorrelated asset, the greatest uncorrelated asset in the world, but you don't have to take my word for it. These are Fidelity's numbers. If you check it, it just has the weakest correlation, very low correlation to the S&P, but also it's got the highest Sharpe ratio. So for the volatility you're taking, you're getting outsized performance.
Bitcoin is quickly changing the investment landscape and is no longer just a high-performing asset. Over the past 10 years, Bitcoin has become the most lucrative and least correlated asset class, drawing significant institutional and billionaire capital, seeking long-term value, while more conventional assets like gold and bonds find it difficult to keep up. A significant change in the direction of serious money flow is indicated by the recent success of BlackRock's iBit, which was hailed as the most successful ETF launch in 40 years. Because of its accessibility, global reach, and limited supply, Bitcoin is positioned as the cornerstone of future wealth strategies, rather than as a fringe asset. It is not only surpassing everything from gold to the tech behemoths, known as the Magnificent Seven, but it is also attracting capital away from legacy markets. Bitcoin presents a completely novel idea in a world where traditional value stores are being undermined by inflation. Incorruptible, digital permanence. Bitcoin is becoming the primary store of value for the 21st century as trust in traditional financial systems declines, causing a significant capital shift from brittle, centralized systems to decentralized digital power.
A year ago, the first ETFs were approved for Bitcoin, right? In January of 2024. BlackRock brought out one called IBIT. BlackRock is the largest money manager in the world. They have 1,101 ETFs. And the Bitcoin ETF went from dead last to number 13 in 12 months. Basically, in the first year, it skyrocketed above 99%, right to the top. And in fact, it didn't just go to the top. It turns out that IBIT is the most successful ETF launch in the history of Wall Street. In the last 40 years, the biggest innovation since Bitcoin, the biggest innovation, if you got to go back 40 years, is ETFs. This idea you can buy a package of the S&P index called SPY. And they've been around forever, and this Bitcoin spot ETF just blows past everything and scorches the earth. That's how much demand there was to invest in this asset. In fact, BlackRock's ETF outstripped its own gold ETF in the first year. Again, gold 5,000 years old, everybody knows what it is. Digital gold in the first year blows past. That's how fast it's moving. There are 20 ETFs, the top 20 ETFs we collated. Turns out 10 of them are all Bitcoin related in the last 12 months. So what you can see is that Wall Street is fascinated with Bitcoin-based ETFs, derivatives, anything that's related to Bitcoin is really changing the world. And those ETFs had not a nickel in them. January 1st of 2020, now they have $109 billion of AUM. And you can see this is becoming a major trend. But it's not just a trend in the US. These ETFs are popping up everywhere in the world. You can see these are the global ETFs. They're popping up in Hong Kong and Germany. They're popping up in South America and Brazil and Australia. Pretty much every major capital market has an ETF launching. Why? Because they make it possible to buy Bitcoin in 10 seconds on the phone. Also, because if you're China government, you want people to keep their Bitcoin in a bank regulated by a Chinese regulator. You don't want the capital to flow out of the country. And so these solve capital control issues, compliance issues, tax issues, convenience issues. And 6% of all the Bitcoin has just been slurped up by these ETFs. The people that are buying those, generally, they're just long-term holders. They're buying them for exposure. And so as they buy up this Bitcoin, they're taking it out of circulation. The price is being squeezed up. I was talking about alternative investments, right? Well, here's 60 global billionaires invested in Bitcoin. What is Bitcoin? Imagine Bitcoin is 100 rich families sit around and say, well, we like money, we don't trust banks, we don't trust governments, we don't trust any currency, we like to keep our money, but we don't trust each other. So they create a bank in cyberspace, they cap out the number of units at some number, we'll call it 21 million, and then all those families can buy into that bank, and since they don't trust each other, they all run a copy of the bank software. That's Bitcoin. Bitcoin is just a very elegant idea for how you get to keep your money, right? Rich people like their money. They want to keep their money, right? This is spreading. Those 60 billionaires, those are just the ones we know, not the ones that own it. I'm sure that a lot of people own it that aren't going to disclose it. But the point that I want to make here is that Bitcoin's the fastest growing alternative investment for high net worth individuals in the world. And, you know, if you think about it from first principles, it's by far the easiest. You know, it's not easy to buy buildings or buy, you know, Paul McCartney's music rights or buy natural gas pipelines. But you can buy $20 of Bitcoin, 200, 2,000, 20 million, 200 million, 2 billion, 20 billion. And it doesn't matter how much you buy. You have the same exact property rights, the same exact asset as everybody else. This is very compelling.
A significant change in investor behavior is taking place as the world's bond markets falter due to growing yields, mounting debt, and fiscal instability. Bitcoin is increasingly being seen as a contemporary safe haven. As conventional safe assets like Japanese bonds and US treasuries show signs of weakness, Bitcoin, once viewed as a speculative outlier, is now directly benefiting from market stress and gaining ground. Investors are looking for alternatives outside of the purview of central banks and government regulations as the US national debt soars past approximately $36.7 trillion, and major economies issue warnings of impending financial crises. Driven by massive ETF inflows and growing institutional commitment, Bitcoin is at the forefront of this capital migration. With more than $100 billion in assets under management, BlackRock's IBIT is one of the most successful ETF launches ever, a clear indication that institutional capital is not merely experimenting with Bitcoin, but is actually making long-term reallocations. By characterizing Bitcoin as digital property, a decentralized, inflation-proof store of value free from counterparty risk and physical decay, Michael Saylor encapsulates the essence of this shift. Bitcoin provides portable, unchangeable monetary energy that is available to anyone in the world, unlike bonds, gold, or real estate. Bitcoin is becoming more than just a way out of an economy that is collapsing under antiquated financial systems. It is also becoming a better, more contemporary standard for wealth preservation. Investors are now asked how much exposure is sufficient in this changing macro environment, rather than whether Bitcoin belongs in a portfolio.